All right, guys, time to get back to work tonight. It's about that time of day again here, after all. Wednesday evening, March the 24th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Thursday's trading session. I got a great video in store for you guys and gals tonight. Charts are all prepped up in the background, as you can see. Got the Emini, got the Nasdaq, and we got the gold on our radar for tomorrow. Boy, lots of great setups. Got some very strong moves down today on the E-minis, and of course, a big juicy range-bound market. It's been a range-bound week on the gold market. Got a bunch of great setups we're tracking for tomorrow. But here's the big question. As we go into Thursday's trading session, big move down on the S&P, big move down on the Nasdaq, choppy range on the gold. So where's the best place to get short tomorrow? Lots of bearish momentum on the E-minis. Got a nice juicy range on the gold. You know me, I love those trading ranges, right? So where's the best way to get short for tomorrow? I got a big move down on the E-minis. Want to short those pops tomorrow on the E-minis. And I got my eyes on the top of the range on the gold to get short tomorrow. Not to worry. I got a bunch of great trades I'm tracking for tomorrow. We're going to break this down into a bunch of bite-sized pieces so you are ready for the action tomorrow. Before we do that, though, just make sure to remind you to subscribe to our YouTube channel. You know, we publish this video newsletter every evening with our best trade ideas for the following day. So make sure you subscribe to our channel. And when you do, hit that little bell icon so you always get notified every time I publish something new. And then, of course, don't forget, if you have any questions, you can always drop those questions in the comment section for me. I'd love to answer all your questions, so don't be afraid to ask questions on this video. And as always, if you tune in every evening, if you enjoy this video as much as I enjoy making it, do me a big favor here tonight. Hit that thumbs up, that like button here on this YouTube video. It goes a long way to help support this YouTube channel. So make sure you subscribe, hit that little bell icon, drop those questions if you got them, and thumbs up if you guys enjoy the video here on this YouTube channel. But enough of the introduction. Time is ticking here. It's almost Thursday. Thursday is right around the corner. So here's the question. All this bearishness, well, the S&P is bearish, Nasdaq is bearish, gold, of course, is range bound right now. So where's the best place to short this market, right? On the S&P, big strong move down. I've got a handful of levels of resistance here overhead. We'll talk about my favorite entry techniques to short the bounces, right? Short the retracements. We'll also talk about how to get short if this market keeps bleeding out, rolling lower here. Same thing for the Nasdaq. The Nasdaq, you'll notice, also has a very strong move down. We're finally back to that weekend gap. It's just in time, right? Wednesday's closing bell. We always talk about how those weekend gaps all for Wednesday evening. We'll talk more about that here as we go into the video tonight. But strong move down here on the Nasdaq. Got a bunch of great areas of resistance. We'll talk about how to short the retracements on the Nasdaq. We'll also talk about how to deal with this range we have underneath us on the Nasdaq. As you know me, I love trading with range-bound markets. So we definitely will take a look at those range-bound setups on the Nasdaq here tonight. And then gold, you can definitely tell gold is waiting on something, right? Gold is waiting on something. We, of course, have had some Fed speakers this week, and gold's definitely still trying to break away from this trading range. It's fine by me. I would love to short this gold here up around that weekend gap, which we haven't been able to retest yet. So that definitely would be my favorite place to get short for tomorrow. I've also got my eyes on a run down to that 1716. So I'll talk about some short setups I'm watching if the market rolls over on the gold for tomorrow. So I'll tell you, there is no shortage of really great opportunities as we go into Thursday's trading session. Now, before we jump in and get our hands dirty on these charts, though, I just want to make sure to kind of go over this calendar with you guys for tomorrow, because tomorrow, as you guys know, this is the fourth week of the month. So we're not quite at the end of the month, right? End of the month is always when I tell you guys, watch out for the increased volatility. So we're not quite there yet into the end of the month. That'll be next Monday, Tuesday, Wednesday. So you definitely want to make sure you come out and join us next week in the trade room, because volatility should be pretty good next week here. As we look at this week, though, or tomorrow's trading session, I would say, got a lot of news coming out tomorrow, right? GDP, jobless claims here, both coming out at 8:30 Eastern time. That's going to be the big news of the session for tomorrow. And then, of course, as we go into Friday, we get that international trade and that personal income number on Friday morning. So tomorrow, that big news of the morning, probably going to be the GDP report at 8:30 Eastern time. So we want to make sure we give the market a little bit of time to breathe, right? 5 minutes before, 5-6 minutes after that. And don't forget, too, some of the best trading we've seen in our trade room has been after 10 o'clock Eastern time lately. I'm not sure why. I don't really ask why very often. I just trade what I see, of course. So we get the big news tomorrow at 8:30 Eastern time. That will likely impact these markets, so give it some breathing room before and after that news comes out. But I'll tell you, if you could only be at your desk for an hour tomorrow, that 10 o'clock to 11 o'clock block has continued to be where we found some of our best setups this week in our trade room. So GDP at 8:30, give it some give it some breathing room, but 10 o'clock to 11 o'clock tomorrow, right? That block as we go into the second half of the morning session. That is definitely where I'll be keeping my eyes open for the best setups. So don't forget tomorrow morning, speaking of tomorrow, 8 o'clock Eastern time, as always, we'll trade together in our trade room. I would love to have you there, right there with us. And let's get back to our charts. So we got the calendar scheduled for tomorrow, right? GDP number at 8:30. Watch out that 10 o'clock hour. And of course, we'll worry about Friday's news once we get there. Got the S&P, got the Nasdaq, got the gold on our radar for tomorrow. These are all prepped up. Good to see you here all prepped up with me. Let's grab the S&P first. S&P, of course, if somebody was to ask me what happened today on the S&P, I would say we pretty much made a run up by the end of the day. What was kind of interesting about the S&P was we talked about if the market made a strong run higher, bears try once, bears try twice. If you paid attention to last night's newsletter, right, I had that kind of sell zone right over here, right, had that channel coming down in last night's newsletter. We talked about this in quite a bit of detail, right? If we got that pop up and break through that area of resistance, we knew traps would be on everyone's radar. That's exactly what happened today, right? They got that trap, but as you can see here, though, by the end of the day today, or by the end of the morning, it's pretty easy to see here. The market was ultimately one big trading range. Market goes up, turns into a sideways range of sorts, and of course spits out on the other end. The two big factors on this chart right now is that trading range overhead. Ranges, of course, are always going to act as price magnets. So if the buyers did get their hands on this tomorrow, which the way these markets have been behaving lately, anything is possible, obviously. But right now, the buyers would have to do some damage. They have to get their hands in this thing to get back to that range. So the buyers would love to go back into that range magnet. That's the first kind of criteria that we see in this chart right now, but it's very difficult, as you can see, to ignore just the overall strength of this big move down, this kind of 1, 2, 3 move lower here. Now, the bears have all of the control, and one of the big things we know is anytime we see a really strong move like this, right, in one direction, it's almost a guarantee we're going to get a two-legged pullback and a retest of that low. You know, anytime you get this much strength in one direction, you got to think any type of pullback here, I've got some, to resistance will be a good looking spot to sell. I've measured the amount of this move off the high. I'm going to use that to calculate some objectives at that measured move, so you can kind of see where those are coming from. And really, there is no shortage of great resistance here. I can take kind of a, big bold marker there and kind of brush that across, right? That's a great area of resistance to look for. I've also got this, if I kind of zoom in on this, I've got this channel drawn off that low up to that high. I really like that channel, right? That's a pretty good looking channel there as well. And then, as you guys probably know, anytime I see a 1, 2, 3 move, I like to go out and draw those channels off those lows and up around that high. And that too would be a great spot for us to look for a short there as well. So we've got plenty of momentum for the bears. And of course, lots of pretty easy to find resistance here up overhead. So I definitely want to be a seller. As I mentioned in the introduction, there's a lot of bearishness. Where's the best place to get short? Well, I never want to sell low. I want to sell high. I want to sell at an area of resistance. Again, whenever I see this much momentum in one direction, there's a good chance we're going to get that two-legged pullback and then roll over and get one more leg going lower. So what are some things to consider here for tomorrow? In these types of situations, I always like to prepare for shallow pullbacks, relatively good pullbacks, and deep pullbacks, right? So, when it comes to these strong moves down, I've got my areas of resistance that I know where those are. Here's what I'm always looking for. Now, first of all, we've got this kind of steep channel, right? That steeper channel here. So we may not end up inside of my sell zone. I like this area a lot, this 38.95 to 3900 area. One thing I'm always looking for whenever I see a real strong move like this is, we might not get that deep of a pullback. We may only get a shallow pullback. And if all we get is a shallow pullback, what's my concern? My concern is location. Remember we talked about this last night on the newsletter video. I'm always asking those two important questions, right? How is location and how is momentum? Momentum is fine, right? There's no doubt about that. But location is not that great, right? Get a big move down. I'd like to get short off somewhat of a deep pullback here to give me a good risk-reward ratio. So if all we get is a shallow pullback, that's where I like to look for trap entries, right? Traps are always my go-to entry setup whenever I have a relatively shallow pullback because I'm concerned about selling too low, right? I'm concerned that my risk-reward ratio isn't that great, and therefore it's not gonna excite a lot of professionals. And when you don't have a good risk-reward ratio in your trade, it's very difficult to get the other pros excited about that. So I have to sweeten the deal and get a better entry, right, on a trap high. So I'd like to see the buyers here try a few times and then get that trap to finish off that move. So that's the shallow pullback to get short here for tomorrow. Not getting too aggressive, just waiting for that trap high and finishing off again that next leg lower, right? That next leg lower. Now, what I'd love to get is up inside this area right here. That's what I'd like to see. Ideally, really, I'd like to get all the way up to the high of that larger channel. We may not though, right? We may just kind of poke our heads into this weekend gap area. And if that's the case, if we can get up inside my sell zone, this will probably feel quite bullish on a real fast time frame. And so what I'd like to do is see if I can't trap in some of those buyers when they buy that pullback. And think about it, right? If I'm a buyer and I buy that pullback, we're not in a bull market right now. That the buyers who are buying that pullback, they're guessing, right? They're guessing this market's going to go back into that range. The old saying of trade what you see, not what you think, right? A buyer at this point, unless they've got some insider information that we're not aware of, they would be taking a low percentage trade buying that pullback. So whenever I see a pop off the low like this, buyers come in, buy that first pullback off the moving average. It looks a lot like these, right? Well, they'll go up above the moving average. The buyers will try to buy it, and then we can sell into those stop losses and sell that pullback that kind of rolls over. So that idea, right, that kind of pattern up there, same thing I'm looking for down here, right? We call these failure into pullback combinations. It's basically buyers trying to buy that pullback off the moving average, right, into a pullback setup, usually right around the same spot, right? Again, look at the example up here, right around the same spot, right? We go up, buyers fail, we come down, and we roll over, right? That is a very, very common kind of failure into combination entry setup. Would love to get short. Now, what if we really pop, right? Because, any market that can go this quickly down could easily V-bottom off of that low. Now, we talked about this kind of scenario last night on the newsletter, right? If the market pops up, makes a shallow pullback and a higher high, remember how we talked about those traps, right, below that low, and how you can get some extra bonus points by combining the channels off that? Remember that last night? We talked all about that pattern last night. That is a similar situation that we'll be in right now. Now, here's a couple things you want to think about, though. As the market pulls back, there's two things you want to keep in mind. Let's get rid of this channel here just for a couple seconds here, because once you see how the price pattern looks, it should make sense. So first of all, we oftentimes will see these sharp moves higher, okay? These sharp moves up around these highs. And then what happens is, as the market pulls back, the buyers try once, they make a lower low, they try twice, and we can get short off these, what I call a nested failure, right? A nested failure. So one try for the bulls, right? Two try for the bulls, and we can short that trend line, or we can short underneath, right? The low there, basically selling into stop losses. Okay. Another thing to think about though is, if the market runs, same thing, right? And it punches higher here, but now instead of seeing it pull back and going lower now it pulls back shallow and jumps up. If we get that, now that creates that same scenario over here. And then you've got your trap waiting here. And again, added bonus, if you can combine that channel right off of that low. So just a quick repeat on this, right? Quick review on this. So if we get that sharp pullback, right? That deep pullback, again, you want to be ready for a shallow pullback, a relatively, average pullback, and then those deep pullbacks, right? So if we get that really deep pullback, that shot, right, goes right through my sell areas now, it's not necessarily a bull market yet. We want to keep looking for short trades, but we have to wait for the setup, because now that momentum is really, really strong, right? Remember, we're always asking ourselves, how is location and how is momentum, right? So if I get a strong pop higher, that's a great location to sell, right? Because I'm selling very high. But what's my problem though? Yeah, my problem is there's a lot of momentum now for the bulls. And anytime we see a strong move in one direction, we expect another leg, right? So I don't want to get too aggressive selling on that strong pop off the lows. I'm going to wait for those buyers try once, wait for them to try twice. Again, I always love to draw that trend line off of that high. There are two places to short this thing. You can sell it off the trend line with that trend line coming down, or you can sell it off of that. Again, one try, two try. All those buyers have their stop losses, right, sitting right underneath that low. And then again, watch closely here now, because this type of setup, right, if the market does, again, same idea, right? Same idea. Market jumps higher here, but now we get is a different situation. Now the moving average comes over, the buyers buy it quickly up with a shallow pullback, and see now this is not the same pattern, right? We go up 1, 2, back down, right? Or we go up, shallow pullback, higher high, and then of course now again, trap low. Now again, remember, you want to grab that if possible, right? Grab that channel. Try to combine that channel. You won't always have that channel, but I'll tell you, if you can get a channel low off that trap low, it is a great, great opportunity here to buy this thing now, going back up into that trading range. So that is some food for thought here as we go. And guys, remember, I go into a lot more detail about all of these setups. I'm kind of just drawing on the screen right now. But these traps, these failures, these breakdown moves, I cover all of them in a lot more detail. I can't go over everything on this video, but if you want to get a deeper dive into what these entry setups really look like and the rules behind them and how we use them in our trade room, definitely grab the free trading course. I'll put a link in the upper right-hand corner here for you. If you're serious about your trading career and you haven't grabbed that free course yet, you'll definitely love the free course. It talks all about my favorite entry setups, the failures, the traps, the reversals. We talk about how to trade ranges and trends. It's a very, very, very detailed video course, and you'll be ready for action the following day once you take that video course. So grab that free course linked up there in the upper right-hand corner. That way you've got the ammunition. Now, one more question would be is what if the market starts to go sideways down here? We have this big low, right? This 38.75 low here. That 38.75 low, we may end up settling in here and going sideways. So if the market does settle in, right, and start going sideways here, this range becomes a magnet, right? We know that range-bound markets are magnets. Ranges are magnets. So what do we do in that situation? Well, if we start going sideways here, now your job is to find those levels of resistance above the range. And we'll do this together tomorrow morning in our trade room. We open up at 8 o'clock Eastern time, Monday through Friday. Find some resistance above the range and then use one of those failure patterns to wait for the market pop up, go into that area of resistance, get those buyers to come in, try to buy that pullback. You know exactly where their stops are, and we can sell right into those stop losses with another one of my failure setups. And again, you'll learn more detail on those inside the free trading class. So range bound markets, pretty straightforward, right? If we start going sideways, find those levels of resistance, use your failure patterns. Again, they'll look very similar to that, right? Go up to resistance above, let that breakout come. Don't try to sell the top. Wait for the pullback. Those buyers will almost always try. And again, you've got your failure into pullback combination. Same general idea right off of that high. And then here's the big question. If the market keeps on grinding lower, right? What's the plan if the market grinds lower? Well, you can remember, a lot of momentum now, but not a great location, right? 38.75 is that low. So our next level down, get a big, juicy area of support down there, 38.52 to 38.44 and 3/4. So we've really got to be careful here. Again, that 38.75 area is a major area of resistance. If we do continue, or of support, if we do end up kind of grinding lower here, not a lot changes, right? Not a lot changes. I'm still going to use the low of this channel. Now, I will say, if the market was to pull up shallow and run going lower, I will adjust that channel and find a new channel, right? And look for that short off the high here, right? So if the market was to pull back shallow, give you that trap entry I talked about earlier, and take off the downside, that will be one of those 1, 2, 3 moves. I'll of course draw a new channel now, and then we'll look for that first test off the high of that channel. So just be aware of that if the market does really roll over on some strength. But if it does just grind lower here, right? If we grind lower, nothing really changes. What I'll do if the market grinds lower is focus on getting above some of those prior swings, incorporate the top of that channel, and of course, same basic idea, right? If I can get a nice deep pullback, get above that moving average here, let those buyers try, use those stop losses right as fuel, and grab that pullback before you go back down to retest the low, right? So failure into pullback combination. So if we do grind lower, just wait to short those pops. Again, momentum is great, but location's not that great. So wait for the pop, wait for those buyers. Again, keep looking for those pops, those buyer failures into pullback combinations. They're very, very consistent, very reliable, right, in these strong trending environments. So S&P, got a pretty good plan of attack here for tomorrow, right? We know where we're looking to get short here. Now all we need is a few more hours of candlesticks, and we can see what we get here going into Thursday's trading session. How about some Nasdaq? Or the Nasdaq here right now. Nasdaq, of course, is in a very similar situation to the S&P. Not exactly the same. There isn't a range at the beginning of the day that the S&P had, right? S&P, of course, has that big trading range overhead here. But you can definitely see the bears have control. Get that nice strong move down. They roll over. They complete their measured move. You could easily argue there's a very strong move to finish off the day, which, again, anytime we see a strong move in one direction, we like to find resistance, and we like to sell those levels of resistance right up overhead. So there is plenty of reasons right now to consider getting short on the next pullback. It's also important to keep in mind where we are right now as well. If I look left, this is that trading range we talked about earlier on in the week, right? That range, of course, along with that weekend gap. Remember, the weekend gap is last Friday's closing price. We talked about this on Monday evening, right? Wednesday evening is usually when these weekend gaps get filled. And as you can see, that is exactly what happened here today. So weekend gap, of course, gets filled. Range magnet ends up dragging this market right back down in. You'll notice there's a big big low down there at 12,681 and 3/4. That might be a little bit difficult for these bears to get down to, because you can see they got that range bottom right here, a bunch of wick bottoms there. So this is going to be a difficult spot down there for these bears unless they can get a lot of strength pushing through this trading range. So again, very similar, right, to the S&P 500 in many ways, some ways different. I measure up that first leg lower, right? I'm using that to calculate kind of if I can get that short, right, where that next objective is going to be. So keep your eyes on those measured moves. I don't want to sell low, right? Momentum is great. Location, not so much. I've got some pretty good levels of resistance here overhead. I've marked up that low, marking up that high. I've got prior swing low. Really love this area here. And, much like I talked about on the S&P, we've got a lot of bear momentum going on. If I get a shallow pullback, for example, there is a little tiny swing right there. And I almost added this on. I almost put this on here as another sell zone here for us. So I'll add it on right now. But just remember, though, if you get a shallow pullback, you want to focus on traps. Deeper pullbacks, focus on failures. So I really don't want to be trading inside of this range. Ranges are always less consistent price action for us. What I'd love to see is, again, that shallow pullback, get above, that 12,850. Very, very low on the chart right now after such a big move down. So to avoid selling too low, I always try to wait for those buyers to try a couple times, get those traps, right, to sell short with a trap. So shallow pullback, look for those trap setups. If I get that deeper pullback now, again, up into, get rid of this area here real quickly here. If we get those deeper pullbacks now up into this area here now, of course, we're onto something. Now I can get a lot more meat on the bone for that short back down. This would be a lot more enticing to a professional trader because of the risk-reward ratio at this point. So as I go higher, again, what's going to happen is you're going to see a lot of buyers, right? They're going to think this market has reversed. They're going to try to get long off the moving average, and hopefully they'll do that right into the high of that channel, right up around that area of resistance. Once I have those buyers committing and buying that pullback off the moving average, now right? Their stops are just waiting right there to act like rocket fuel, right? To short this thing. So I want to sell into those stops. And again, as I mentioned before, one very common kind of combination here is that failure into pullback combination. You can see example right here, right? We go above the moving average, buyers sort of buy the pullback, they fail, and then of course you'll see what happens, right? They pull back and roll right over. This happens over and over and over again. So again, get up off that low, get above that moving average, get these buyers to come in, try to get long, hit them right where it hurts, sell into stop losses, sell that pullback. I know my drawing here isn't perfect, but hopefully you're going to see the point I'm trying to make. And again, if you want to get a lot more details of all of these specific entry triggers, the failures, the pullbacks, and the traps, I covered them in a lot more detail, tremendous detail in that free trading course. So grab a little button up there in the upper right-hand corner to join the free trading course and learn these specific entry triggers that I'm talking about. And then this is the true test, right? This is always a true test. Does the market spike? You know what I mean? Does it really spike going higher? Because, if it blows right through these areas, then obviously that's quite a bit of bullish momentum. But remind me again, at what point does a bear market turn bullish? Once we get that 1, 2, 3 reversal. In other words, once we see that jump above the moving average, the buyers pull back and they hit it, right, on strength. All that matters, the only thing that matters for a reversal is how the market reacts on the pullback. Look back here, for example. Here's a really strong bounce off the low. Was that a reversal? Clearly not. It doesn't matter how strong the bounce is. Can the buyers hold the pullback? Okay, again, they got to hold the pullback. Now, right here, for example, this could have easily reversed if they went up, pulled back, and go. that is a reversal, right? This could easily happen earlier, right? We go up, we pull back, and we go. That is easily a 1, 2, 3 reversal. That's when we know this market is turned bullish. If we don't get that, we keep looking for shorts, right? Simple as that. So if I see the market jump up, hold that pullback, and go, right? Now that creates my 1, 2, 3 reversal. The buyers have control. In these situations, I like to look for those kind of hidden channels drawn off of those highs. I like to bring that channel, of course, off the high, down to that low, and you want to look for that first pullback to low of that channel. So as the market runs higher here, if it does 1, 2, 3 reversal, look for those, seller failure patterns, those bullish pullbacks, those strength moves, those trap moves coming off of the low of that channel. And again, I can't go over all these specific entry triggers, right, in this video, but I will definitely go over all the details you guys need to trade these on your own. And of course, make the most of our time together every evening in this video. Definitely grab that free trading course. You'll learn all about all of these specific entry triggers. You'll learn more than I'm giving away in this nightly newsletter. So that's what a reversal looks like. So keep in mind, if the market really pops higher here, is that a reversal yet? No, it's not. But it's a lot of momentum. Right? Remember, location and momentum. Great location, right? I would love to short that because it's a great risk-reward ratio, right? Beautiful risk-reward ratio. The problem is, though, it's a very strong move. So what's the best way to short a real strong pop? The best way to short a strong pop is let them try twice, right? Let them try to buy it once. Let them try to buy it twice. As I always say, right? There are a lot of different ways you can trade this, but really at this point, once those buyers try once and try twice, you know exactly where their pain points are now, right? Their pain is right below that low, right? So a big juicy red candle now, get short, right? That is your short signal right there. Short that sucker right back down in those stop losses. And then don't forget, these types of pops and 1, 2 failure, they oftentimes result in that move down, right? Because once those buyers get caught on the wrong side, once they get caught with their hand in the cookie jar, because again, it's not a bull market yet. So buyers who are buying that pullback there, they're trading what they think, not what they see, right? So once those buyers realize they're wrong, the market will oftentimes roll over on a lot of strength. The trick is mark up that low there, mark up that high there, and there's your first pullback, right? Let me back this up a little bit here, right? So we slam lower, draw that trend line there, draw it here, bring that moving average over. You see that? That is a beautiful short setup. I can only hope we get something that pretty right here tomorrow, right? So strong jump up. We pop up above resistance. It's not a reversal yet, but let the buyers try a few times. Short that first, right? Short that failure. And then if we get lucky, right, grab that trend line, grab that channel, and we can short right off of that channel here. So a really, really good example there if we do get that pop. And then watch closely on this one, because sometimes what happens is the market will really jump, right? It'll really jump, but you don't get that go. Right? All you get is that, right? You don't really get that jump. So what happens is these types of markets, right? It's not the same thing as that 1, 2, draw that trend line and short, right? It's very different than that. So we get a strong pop up, the buyers come over, they don't blast, which turns into a new channel and buy the low of that channel, right? Again, failure, pullback, strength, trap setup, right? Learn that stuff in the free course. They don't get the reversal there. What they do, though, is they hold the pullback with that higher high. Once I get that 1, 2, 3, and again, I always say strong move, shallow pullback, higher high in price, trap, baby. Trap, 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 trap. That's exactly what happened today on the S&P, right? And again, as I always remind you guys, bonus points, if you can combine the low of a channel. Right? I'm always looking left, trying to find some of these prior swings to lock onto there and find that hidden channel. Okay, obviously tomorrow morning, we'll do this together tomorrow morning in the trade room, so we'll know more once we get there tomorrow. Now, where do these buyers want to go to? There's a lot of space overhead here for these buyers, right? Get a big round number at 1,300. Really, if the buyers can get their hands on this thing again, they've got that big range up there from yesterday. So if the buyers can get their hands on this, it is a pretty big move, but I mean, come on. It made the whole move down today. There's no reason why it couldn't go right back up tomorrow. Obviously, we have to get that return first, right? We're going to get that turn of momentum here first. But, it definitely could make that move back up into that 13,100, that range we had from yesterday. And then very similar here to the S&P, if we do end up going sideways inside this range, you know me, I love a range-bound market. What do? You find levels of resistance overhead, right? So mark up those lows, mark up those highs, wait for price to bounce. We don't want to just short inside a range. Wait for that price to bounce. And don't forget, right? It's a rookie's game of trying to pick that top, right? It's very difficult to pick a top when a market jumps up on strength. Okay, so don't make that rookie mistake. Okay, if you're watching this video right now, you have definitely elevated your game at this point now. So don't make that rookie mistake trying to pick tops and bottoms, right? It can be so much easier. If the market does go sideways, find those areas of resistance. We'll obviously provide more details in the video classes. And then wait for that strong jump up. Wait for that pop up. Once we get that pop up now, wait for those buyers. Right? Moving average comes over. Wait for those buyers. Wait for them now to commit off the moving average. If they hold it and go, what is that called? Right? If they hold this and go, what is that? That's a 1, 2, 3 reversal, right? So now grab that high, grab that low. First pullback is the best pullback, right? First test is the best test, right? Seller failure pattern, bullish pullback combination, bull strength, bear trap, right? Anything we can find to get in off the low of that channel. Great opportunity there if they can get that reversal. But in most situations, though, they're not going to get that reversal, right? Not going to get that reversal very often. We wait for the price to pull back. The buyers are to buy the pullback. We know exactly where their pain points are now, and we exploit it, right? We find out right where their pain points are, and we lean on it because, well, if you're long on that breakout pullback, you are trading against the odds. You are trading against momentum. The range acts a magnet. I do not want to be long above a trading range like that. So when I see bulls get long because they're trading, they trade in what they think, not what they see, right? The trend is way too bearish. When I see traders commit to a trade like that, it's just a matter of time before it fails, and we'll sell into that failure. And again, if the market runs lower here, keep in mind we may get that. We may get that shallow pullback, trap, and blast lower here. If that's the case, if we do see another leg of strength going lower, just simply mark up that new low, right? We'll abandon this channel. We'll mark up this low, mark up that high, and then again, we're looking for those, right? Those entry setups off the high of that channel. Usually what will happen is we'll get above the moving average, right? It'll be a buyer failure into pullback, combination, failure, pullback, strength, trap as the market rolls lower. And again, I go into all the details on those entry triggers, right, inside the free trading course. If the market just simply rolls going lower here, right, that is your cue now. Call this a spike in channel, mark up that prior swing, wait to get that pop. Nothing changes, right? Wait to get that pop. Buyers get long foolishly on the first pullback. We can hit them right where their stops hurt, right? Failure into pullback combination. So very, again, relatively straightforward plan here. I would love to see a deep pullback. And, honestly, I wouldn't mind at all if this market goes asleep on the overnight, goes sideways here, because that sets things up for a great failure tomorrow morning. So where's the best place to get short in the Nasdaq? We got quite a bit to work with here. You now have a good plan of attack, and tomorrow morning we'll do it together. Obviously, tomorrow morning in the trade room. Let's keep going. Gold is wrapping things up here for today. A little brain fart there on a Wednesday evening. What's going on here on the gold? Now, like I mentioned before, it does feel like gold is a little bit waiting on something. A lot of Fed speak this week. We had Powell on Monday, Tuesday, and Wednesday. I mean, I've heard from that guy more this week than we've had the entire year so far. So lots of Fed speak. It definitely feels like the market on gold here is kind of waiting to see what's going to happen with this pandemic. You know, in Europe right now, it's horrible stuff because it sounds like they're locking you guys down again in Europe. Meanwhile, here in the U.S., right? I mean, I live in Los Angeles. We've been locked down since last March. They're opening up movie theaters potentially here soon in Los Angeles. So it does seem to be kind of a tale of two pandemics right now. Obviously, I hope everything goes as best as it can for everybody. So, stay safe, do all the things they're telling us to do right now. But you could definitely tell gold is probably a little bit of the, which way are we going right now? Are we going good? Are we going bad? So, and combine that with the Fed speak this week. I'm sure that was kind of the cocktail of what's creating this bit of a, I wouldn't say challenging, but just a real choppy market, right? Choppy market. Now remember, when markets do this type of stuff, right? Markets, they love to expand and contract. Now, I'm not sure if you recall, I know it was 2 weeks ago, but before quad witching, I know it's all a blur sometimes, but 2 weeks ago, this market was ripping, right? It was ripping. So we're definitely in that kind of, last week was quad witching, this week. So we're definitely in this kind of, tunnel here right now where things are getting pretty narrow, but that's not going to last forever, right? Don't be giving up on the yellow metal here. It's too soon here. What you do not want to do is jump from market to market to market to market. Have you ever heard that term, jack of all trades is a master of none? Yeah, that's exactly what I'm talking about. So, give gold some time right now. It's consolidated right now. But again, markets go from boom to bust. They go from expansion to contraction. And if you want my personal advice, I would resist the temptation to chase markets that are volatile. Because if you chase after volatility, you're going to usually end up losing money that way. So learn a couple markets' personality. Focus on a few markets, really master their personality. You'll be better off in the long run. Now, what's the plan here for gold? Well, we got this range, right? Got this range. The range, of course, is a magnet. Now, my job in a range-bound market is to find support levels below the range and buy, and find resistance levels above the range and sell. My job is to stay the heck out of the middle of that range. So one thing we can see right now is we are coming off the low of the range and rotating back higher. So the question today is where's the best place to get short? The best place to get short is up around these highs of that trading range. Now, one problem we're going to have is this trend line coming in. And if you watched last night's newsletter, you probably know my technique of handling these rising support trend lines. So we'll talk about that here in a second. I'd like to get this thing to pop up and give us a shot here to short this thing back down again. At the same time, if we do get this roll lower, we have a big, juicy target here down around those lows here. And you'll notice if you look at this as on kind of a big picture here, we have a lot of bear momentum overall. So there definitely is going to be a spot here for us to get short as the market goes lower. But you know what I'm going to say, right? Location is horrible as we go lower. So we got a plan put together here. I want to sell above that high. My biggest challenge right now is this trend line right here. This is my biggest challenge. That support trend line is my biggest hurdle that I have to get through here to get short on this. So what's the best way for me to short this thing off the high? Well, there's two components you want to remember. As we go higher here, I want to sell off this high. Remember those two questions? Location and momentum. Now, what do you think? This is a great location for us to get short. It's above the top of the range in an area of resistance. I love, love, love this area right up here. The weekend gap is a magnet, so that could easily send us up into those highs. I've got my pendulum swing from the low up. So this whole area, right? This whole area up here is a great spot. But here's the deal. If it runs higher here, location's great. Momentum stinks. Well, not for the bulls, but the bears, right? So how do we protect ourselves against a bullish momentum market? I want to be a seller. I'm not going to buy up here. What do? We have to give the buyers the benefit of the doubt. We let those buyers try once. We let them try twice. Remember we talked about that earlier? Draw that trend line over, identify those stops. And there's two ways to get short, right? One is off the top of that trend line, or even better, off a trap above that prior high, right? Those are both great setups. The second one is going to be that, right, literally selling into those stop losses, right? Kind of see an example right here, right? We go up, the buyers try once, the buyers try twice. Obviously, it's very small. On a faster time frame, though, find that trend line and back down, we go from there. So that's going to be something we'll want to watch for. Now, here's what you've got to be careful for, though, as this market goes higher. If we do get that run going higher here, and we see a very sharp pullback like this, right? This is going to be one you're not going to want to take. Why? Because of that trend line of the way. So if we can get up, right? If I can get up and buyers once, buyers twice, and if I can get a pretty decent distance here between that entry and that trend line, I always tell my clients, make sure you've got that 1-to-1, right, before you get that trend line. And we'll talk more details on that tomorrow morning in the trade room. But if I can get a relatively flat, trend line up there, I can short that without any problems. The question you want, the challenge you want to be kind of aware of tomorrow is if this thing pops up, we see that pull back, and what happens sometimes is it'll go like this. It'll go right back down again like that. In that situation, that trend line is your biggest enemy. What you want to do is try to get up around that trap high area and short that top. This may take some patience. We oftentimes will see the market pop up, get that really deep pullback and then slam lower, and then like an hour later, right, it finally goes up and the trap is set up there to short that high. It's the same idea, right? Buyers try once, buyers try twice, but a little bit different because, again, we're trying to avoid that trend line coming down. All right, so as we go higher here, momentum is the concern. Buyers try once, buyers try twice, and back down in. It all depends on the specific entry technique, will all depend on how close we are to that trend line. I don't want to trade inside the middle. So if we sit on the hands, or if we trade in the middle, we sit on hands. What if we roll over, right? What if we roll over? Well, how is momentum? Great, right? Lots of bearish momentum right now. How is location? It's horrible. So what do we do with a lot of momentum, but not a very good location? What's my concern? My concern is I'm too low. What's the best way to get short when I'm worried about selling too low? Traps, baby. Wait for that lower low and hit that trap. Okay? At this point now, I'm not so worried about selling below the low of the range. You know why? Because we did not complete rotation. One thing about ranges is they like to rotate. They go up, down, up, down, up, down, up, right? So now we should be rotating off these lows and then back down. If this market says, heck with that, we're going lower, something has changed. And in that situation, if we can get that strong move down, if I can get that lower low, I would love to grab that trap off of that high. And then, of course, don't forget, right, what's a breakout look like? A breakout is a 1, strong move up, 2, pull back, 3, breakout, 1, 2, 3 breakout pattern into hidden channel pullback. Again, I'm running late on time right now, right? But failure, pullback, strength, trap combination. We'll talk more details of that in that free trading course, right? Linked up in the upper right-hand corner. Remember, the strength of the move higher does not matter, right? They can see a strong move higher all they want, and unless they can hold it and go, that is a breakout, right? Or a reversal. right? We talked about this before. Or we go lower. 1, strong move down. 2, pull back. 3, blast off it. Mark that low, mark that high. And again, first test is always the best test, right? Buyer failure, bear pullback, bear strength, bull trap, right? Off of the high of that channel. We'll talk more details about the specific techniques tomorrow morning in our trade room. But now we've got a pretty good plan of attack to trade this gold. If they can crack below that 1716, remember they still have that 1700 big round number waiting down there. So again, as I mentioned before, we might be consolidating right now, and it's understandable, but don't go giving up on the yellow metal just yet, guys, right? And again, don't go chasing volatility. Learn a couple markets, learn how they work, learn their volatility, learn their personalities. Not every day is going to be a rip-roaring day, but if you jump around from market to market to market to market, just like anything else in life, you're never going to get that good at trading, right? So really buckle down. I love the S&P, the Nasdaq, love the oil, love the gold. Honestly, they all work great. Just don't jump around and chase everything. I know it's very difficult when gold's not moving very well, but trust me, this will not last forever. The yellow metal will see its glory days again here. Don't you worry. All right, guys, wrapping things up here for tonight. I've taken up too much of your valuable time. I hope you'll join me tomorrow morning at the opening bell. Coming out and joining us every morning as a member of our trade room is very, very easy. If you're on the blog right now at Sideways Markets, I'll put a big button for you guys to join up below the video tonight on the trading blog. If you're on YouTube watching this right now, I'll put a link in the description for all the details that you need. Please don't forget to grab that free trading course if you want to learn all about these specific entry triggers that we use in our trade room. Don't be afraid to call me in the office. I'm always here standing by to answer all your questions. I got live chat on the left, live chat on the right. And I look forward to seeing you guys tomorrow morning in the trade room, 8 o'clock Eastern time, or tomorrow night on the next edition of our nightly newsletter. But that's it for me, guys. Thank you so much for tuning in. Thank you so much for sharing this information with a friend. And I hope by now you subscribe to our YouTube channel. That way you don't miss tomorrow night's video newsletter. All right, guys. Have a fantastic day out there tomorrow if I don't see you guys in the trade room. And I'll be back tomorrow night. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.